Hi, I'm Chris Hill here with Austin Smith. We're talking housing today, and housing's been in the news a lot lately, certainly given the great run that the market has had over the last year or so. But let's start with home ownership and the whole notion of who's number one out there in terms of who is the largest homeowner. We were talking earlier, it was a name that frankly surprised me.
Yeah, it's pretty staggering. So I've become interested in sort of the real estate market lately, particularly after the bubble. Who isn't? But the largest homeowner in the U.S. right now is actually Blackstone. They own 29,000 homes that they all picked up at rock bottom prices coming out of the recession. The goal being to rent them out as sort of cash cows over the long run. We'll see how long they actually hold them. And they recently did another $5 billion equity raise to buy some more homes. So they are officially far and away the largest homeowner in the U.S. right now. And they represent this consortium of private equity groups that are really getting into the home ownership game right now. And I'm talking single family homes, not big apartment complexes. So, over the last year, I believe private equity made up about 8 to 10% of all home purchases, single family home purchases in the U.S., which is a staggeringly high number.
We've talked about housing before and the whole notion of, well, if you want to bet on the home builders, you can do that, but housing is one of those industries where there are a lot of different ways to play it. What do you think is the best way to play it, given the news about Blackstone?
Well, the interesting thing that I see from here is they're buying a huge number of homes to rent, and then that sort of got me wondering, what does the home ownership trend look like? And what I realized is that we actually hit the lowest home ownership rate that we have in 18 years. We're at basically 1995 levels, so 65% of homes are owned by the people who live in them, which is a staggeringly low number given our historical predisposition towards home ownership. So they're starting to seem like there's this sort of massive underlying trend towards more of a renter economy. And it's still not the majority, but it's definitely a growing part, and you see people moving towards more urban areas, and that sort of confirms this trend. So when I think about that, I think about a company like Americo that actually could stand to benefit, because historically, and Americo owns U-Haul, because historically renters move at 6 times the average rate as homeowners, so they move more frequently. So if there's this massive move towards a more rental economy, somebody like Americo that's helping people move in and out of locations could actually do pretty well for themselves. Zillow's actually not a bad bet either with their acquisition of Rent Juice, but very much in the early stages here. You're just kind of betting on the jockey, Spencer Rascoff, that he can make that as big as their other divisions that they have.
So with the rise in housing and the increased activity over the last couple of years, we've also seen a rise in the value of homes. But you think that's going to plateau. Give me a couple reasons why.
Yeah, so a couple interesting trends I noticed. Now, full disclosure, I'm no Stan Humphries, I'm no Professor Schiller, but 3 sort of interesting trends that maybe could indicate a sort of short-term plateau in home prices. And one is some data that actually came out of Zillow, which is that basically a quarter of all homeowners today in the U.S. are underwater on their homes, that their home is worth less than what they paid for it. And when you're in that situation, you're not predisposed to move. Zillow actually went a step further, though, and said if you look at sort of the cash that's involved with the move based on real estate transactions and moving costs, most people who are, when you look at people who are actually above water, they don't really have the cash to afford that move, even if their home is worth more than they paid. So the effective number, or the effective percentage of homeowners who are underwater is actually closer to 40 or 50%. So that's a lot of people who just don't have a good motivation to move. So that's one factor. Another is the spike in interest rates. We saw them go from under 4% up to 4.5%. Obviously a sort of unexpected and unprecedented jump over such a short time frame. Definitely curbed a lot of the mortgage applications that we saw immediately as soon as that happened. And then the third factor is the big buying by private equity. Private equity has been scooping up about 8 to 10% of single-family homes over the last year, and that may not sound like a huge percentage of overall supply, but when you think of how the real estate market works, when you only buy a few homes in a market, maybe above asking price or above what the expected value is, which private equity was sort of doing just to scoop up as many homes as they could, it raises the value of that whole neighborhood because it's all based on comps. So you've got 40% of people who can't afford to move, a spike in interest rates sort of giving people the impression that it's suddenly become more expensive to move, and the fact that private equity may have, and this is just a theory, have sort of pushed up neighborhood home values past what real individual home buyers would have done on their own. So making it sort of difficult for people to justify buying, and maybe this rise that we've had in prices as private equity tapers off, it's going to plateau in the short term.
So if home prices are plateauing, it stands to reason that the buying and selling is going to taper off as well. So as an investor, how do you play the housing industry in an environment when prices are plateauing, and therefore probably so is activity.
Well, a couple things. I think as far as the mortgage interest rates go, it was definitely a knee-jerk reaction. So this could definitely be a short-term plateau.
Sure.
Long-term, 4.5% is incredibly cheap, especially in the historical context of a 30-year mortgage. So I don't expect this to be sort of like a paradigm shift in the real estate industry. But if you sort of subscribe to this idea and you think that people may not be moving as much, there's a huge amount of data out there, particularly out of Zillow from their digs surveys that they've done recently, that people who aren't moving are staying in their homes and renovating them and modifying them. So logical stock picks here are going to be Home Depots and Lowe's. Although I think they're a little expensive to the growth you're getting, but if you really want an exciting one, look at Tile Shop Holdings. Great foolish pick. Looks expensive on paper, but they're expanding very rapidly, high inside ownership, visionary CEO, and just a great business model. So if you subscribe to this notion that people who aren't moving are going to be staying in their homes longer,
Upgrades.
they may want to upgrade and renovate them. 3 good picks to put on your radar.
Buying a home today is certainly a whole lot different than it was, say, 20 years ago, and it seems like it's for the better. You think that home buyers are actually even more empowered now than they ever were before. Why?
Absolutely. It's an unprecedented era of home buyer empowerment, and there's just so much data that's so readily accessible. And you've got these companies like Zillow and Trulia that have completely leveled the landscape of homeowner information. I mean, just the simple fact of putting homes on a map next to schools and restaurants and public transportation empowers homeowners or potential home buyers in a way that they've never been before. So I think what you're going to start to see is an extremely empowered home buyer. Realtors can no longer sort of hide in these sort of ivory towers of information and comps because so much of it is available to us for free. And when I think about that, I think that the portals are going to be a really interesting space to look at going forward. I'm a Zillow shareholder, and Trulia has a very similar model to Zillow. And they sort of become these one-stop shop portals where home buyers get educated about the homes they want, and then they reach out to a realtor to help with the transaction. So on one end of it, I think the portals are a really, really interesting way to play this sort of empowered home buyer revolution. And I also actually think you're going to see a lot more brokers switching towards a Redfin model, which is much more of a lean, low-cost model. We're just here to help you buy a home. We're not here to help sell you a home. And that's sort of the interesting transition. So when I think about all of that, the future home buying experience, a lot more of it is going to be mobile, and that's definitely going to help people like Zillow and Trulia. Zillow already gets more than half their traffic from a mobile device, and as people drive around neighborhoods, it's a great way to sort of for them to get information about the home that they're looking at. So I think it's going to be more mobile with more empowered buyers and sort of a leaner sales experience. And all in all, that's great for home buyers.
All right, that's going to do it for this week. For Austin Smith, I'm Chris Hill. Thanks for watching.